on the 16th of May. This is the week of the 16th through the 20th. We have a pretty busy week ahead. Let's talk about it. How's everybody doing today? If you're out there typing a wire yes, if you can hear my voice, let's go into the risk disclaimer. This is me. Happy Monday. What's happening? If you can, I'm going to jump into YouTube, make sure everything's coming through loud and clear. If you would confirm, that would be excellent. We are live. And Don is in the house. Wayne is in the house. Chris, Andrew, Gary, what's happening? Hey, everybody. Russ, good morning. How are you? Who else is in the house? Who else is in the house today? Give me 1 second. All right. Craig here, Marilyn here, Dennis here, Ali. What's happening? Scott, good morning. Nice to see everybody. Just got off. Nice little birthday weekend. Turned 40. Now's when the wisdom kicks in, right? All right, let's get to it. So, I have a super busy week ahead. I'm going to take the handwritten notes and going old school this week, but it is a super intense, busy week with stocks and options. I have a screenshot to show what I'm talking about with these handwritten notes. So I have a lot of expirations. If you can see this between accounts and equities on demand trading room, that's literally just chicken scratch on a piece of paper from top to bottom, my portfolio from A to Z. It's going to be a lot to manage. Now, I want to see, how well the week's going to go. Obviously, we had a nice little turn on Thursday, Friday last week. But if things start to fade again, then I will probably end up taking some losses on credit spreads this week. I may not take a bunch of assignments unless I really like the stocks. But the last 2-3 weeks have been very challenging because everything has been falling. Right, the first 3 months, even into April, energy plays were still doing well, commodities still doing well, and I just think that's interesting. The last couple of weeks, everything feels like it's been sliding. So crypto is down, equities is down. I'm just completely discounting last Thursday, Friday. That was a bit of a relief rally, if you will. The SPY nearly hit 20%. I've been talking about that level for a month now, easily. Like, if we're gonna fall, let's fall to 20%. See what the market's made of. See if the bulls are gonna defend it. Blah blah blah. Didn't happen, right? So we fell to 19.92. It rallied. We're looking at the SPY being fairly flat this morning. Pre-markets, we're about 26 minutes away from the open. Pre-markets down about $1. Q, same thing. Futures pretty flat. So we'll see what's happening. Futures-wise, Dow futures flat, S&P futures flat, NASDAQ flat. Did find an interesting statistic to see where we're at this year. Also noticed that Goldman downplayed the GDP forecast for the U.S. This is last week's moves. Dow was still down. S&P still down, NASDAQ still down. Even with the recovery, they're still down for the week, negative 2.14, 2.41, and 2.8 respectively. Bitcoin cracking below 30K and struggling to reclaim 30K. So again, everything down. Ethereum ended up tapping like 1800, 1750 area. Overall, where does that put us on the year? I want you to notice this highlighted section. I thought this was interesting. This is straight out of Morning Brew. I think there's a link in my description for all these videos. There's a Morning Brew link if you want to subscribe. It's a free newsletter. Right to the point, good financial news between Morning Brew and Stock Twits. You can read, updated financial news every day. Pretty cool. NASDAQ for the year down 24.54%. S&P down 15.57%. Even with the rally last week, the last couple of days, we're still 15.5%. Let's see if that 20% gets defended. Dow is down 11.4%. The Russell's down over 20%. 10-year keeps bouncing off that 3% level. Bitcoin, we know, is right down below 30K again. Netflix down to 68, actually from the high to low. This is a crazy chart. I talked about this with a friend last week. Netflix down 71%, I believe, from high to low. Coinbase down 90%. Now, this is interesting. Netflix 187.64 was a close last week. We're at 193.59. We do have a credit spread rolling out to this week on Netflix. If we somehow see a nice little rally, that'd be fantastic. This week in equities on demand, we might look at a credit spread. We might look at like a 195 by 190. Maybe take a chance on Netflix this week and kind of double up, because if I can look, if I'm going to lose on this credit spread for 250, I could still gain maybe 240, 250 on another one. So while we're at it, I may look at a 195 by 190. I would try to take the same amount so I could essentially wash the trade. If I am, well, I've got risk on both, so don't worry. I could lose on the 225 by 220. I could win on the 195 by 190. I could wash it, so there's no risk. Okay, what I don't want to have happen is if price goes against me, I'm still going to end up losing on both credit spreads. I will not take assignment on Netflix. It's a little bit expensive, even for 100 shares. That's a lot of capital that I don't want to allocate. All right. Coinbase, on the other hand, I did lower my costs a lot with a excellent $85 plus put. And Coinbase, I followed it all the way down from 145 to the 50s, and we had lows here on Coinbase at 39 bucks, insane. And we're trading right now pre-market 68.21. We still have some gaps to fill. I may end up losing Netflix. I've got a $60 call. I think I pushed it to, let me check here, Coinbase. I pushed it out to the 27th or the 3rd. I'm not sure. I'll confirm that right here. To the 27th. So I have a $60 call. I've already lowered my cost quite a bit. I have a couple of credit spreads in, the 90 by 85 that goes out to June 3rd, the 60 by 55, which goes out to July. So I still have some income plays on Coinbase. I'm trying to flip the stock. I took ownership of it, which my break even is around like $55 or slightly less than that with a rolled covered call. So did some pretty awesome work on Coinbase. Hopefully it pays out nicely over the next couple weeks. If not, no big deal. Well, kind of a big deal because I want to get paid on that stock, obviously. All right, let's move on. So busy options week. Tons of expirations. We'll have a super busy equities on demand trading week. Speaking of equities on demand, if you're interested, just want to make a little shameless plug on this, pulverreport.com. If anybody's interested in trading with me for a month, it is inexpensive. You get a free trial month with me for 27 bucks. Go to the website pulverreport.com, click on systems, and then trading rooms. Okay, there's courses there in the systems tab that have all been added. You know, these are courses that I teach, robots that I have, stuff like that. If you're interested in learning more, also the trading rooms, trade with me live, Forex for the Flex trading room, Tuesday, Wednesday, Thursday, equities on demand, Monday through Friday at 10 a.m. Okay, so 27 bucks for an entire month of trading live, good stuff. So if you don't know, now you know. But I think most of you in those trading rooms, yes. All right, thanks, Tom. Look at that. We got Donna helping out, Tom helping out. I know Daniel helps out. Yeah, everybody likes to smash that thumbs up button, right? Another shameless plug. All right, let's go. Let's get into some currencies. Currency strength chart. I did take profit this morning on the pound Swiss. We finally hit a nice little pocket. I've been eyeing that trade for the last couple of weeks. Here it is. So I was looking at this mainly on the 4-hour time frame, and my drawing tool is right here. So we have this little pocket area that I was trading back towards, built a little position, and taking some profit on it today. So bought some equal lows, stacked up a couple of orders. It just tapped the touch of my pocket this morning at 23.30. We're back down to 23.08. If you're willing to hang on to the trade, I do think it's going to come back up to this level. I will say this, I'm out of the trade right now. If it pulls back down here and this pocket's still available, guess what I'm doing? I'm going to buy some more, and I'm going to take it back up to that pocket. So in a way, you know, I hope everyone that's following my Telegram updates and Flex was able to close out there around 23.20 to 23.30, protect some profits. If it goes higher, okay, fine, trade's done. But if we pull back and this pocket's still available, I'm buying equal lows at 2100, 2150, stacking back in, and I'll scalp this all the way back up towards 2350 and beyond, right? Or the same level again, 2300, 2350 looks great. So good trade on that one. Euro Swiss is cooperating, and hopefully will continue to do so for us. 104.71, and I would love to see this one break the highs. Love to see this one break the highs. These recent highs up to around 105.15. Yearly pivot, you know the deal. This has been like the not the Black Swan, the Swan Song, I should say. 106.20, 106.50, 10700. Do I have any takers? Any bidders? I want to take it to 106.50 or higher. I did get a couple of add-on trades. We did buy the 104, 103.76 pullback zones, and hopefully we will take out those highs and show that we're continuing to go up, and away on the Euro Swiss. Anyway, those are trades I am watching. Also, we had a small entry last week in Forex in the Flex trading room, pound US dollar at 22.25. We have an excellent pocket area that I want to trade back to. I will say this, it is still the middle of May, all right? So this whole idea of the bottom in the stock market, I don't know if that's the case. This whole idea of tops and bottoms in Forex, I don't know if that's the case. We could still have 1 to 2 weeks of the same direction we've been dealing with, all right? So be mindful of that, because if we see the same direction, path of least resistance, don't call tops and bottoms. If you're dollar cost averaging in, be prepared for having cash at the ready. If you're looking for tops and bottoms in Forex, make sure you're getting some price on the right-hand side of the trend line with confirmation. Because if you're not seeing that, it's the same thing as left side of the trend line is anticipation. You could see overbought conditions, oversold conditions, but if the market is not willing to turn yet, we don't have those tops and bottoms in that we could be trading, right? We still want to buy low, we want to sell high. Look for that confirmation. So because it's still the middle of the month, I can't recall the last time we saw a turning point, major turning point, especially after some of these big trends we've seen the last month or so, in the middle of May. Usually it pushes into the end of May, path of least resistance, and even drifts into the summer as we get it fades, June, July, August. We transition a lot in August, September. So I'm not saying that the good looking tops and bottoms are going to take 3 months to materialize, but I'm just saying be prepared for maybe more of the same. That more of the same might include dollar index being stubbornly bullish. Maybe it goes up a little bit higher towards those 2020 COVID highs. This is dollar index, USDOLLAR, compared to the DXY. They're weighted differently. The technicals look great on both of them, but man, it's just look, I like dollar index short, okay? I'm just not quite willing to jump in and fight it yet. Not yet. It's close. Like I talk about this trend line stuff right here, it's not that hard. Just wait for a trend line to break, right? That trend line breaks, we gravitate towards this trend line, gravitate towards this, trying to get back into this resistance. Maybe it falls back into the midpoint. Maybe we have this 5-wave move. We look at an ABC correction, the same thing that just played out on a lot of those yen crosses. High to low, lower high to lower low. That plays out on dollar pairs. Great. Okay, so that's what I'm going to look for. News-wise this week, I did see we had a lot of Fed speakers this week, I think. I know Powell's speaking this week. Let me go to forexfactory.com, take a look-see. Monetary policy report hearings. What the heck? What is going on? Is this some big Fed conference? Bank of England, Monetary Policy Committee members, more hawkish, whatever that means. That's today. Let's go to this week. So it's strange. It must be, is that a meeting of the minds? Like we've got Aussie monetary policy meeting minutes, FOMC Bullard speaking, Fed Chair Powell speaking, FOMC Mester speaking. Like that's a lot of Fed. That's a lot of central bank talk this week. Inflation at Wall Street Journal's Future of Everything Festival. Huh. Future of Everything. That sounds a little too hip to be having Fed speakers there as your panelists. The future of everything. Let's invite a glorified banker. I don't know. I read Tom Sosnoff's comments on what he thinks of the Fed, so I'm kind of the same mindset. But a lot of Fed talk this week. CPI numbers coming out of the UK, Wednesday, 2 a.m. Eastern Time. CPI coming out of Canada this week, Wednesday, 8:30 a.m. Eastern Time. 9:30 p.m. Aussie news. We're starting to see the rhetoric change and narrative change in these central banks. RBA looking to raise rates. ECB looking to raise rates coming off of those zero levels, right? ECB is at zero negative deposit rates. If they get to 0.7, 0.75 basis points, that'd be pretty interesting to see where flows go to the euro. Parliamentary elections for Australia over the weekend. See if there's some gaps. I'm not sure what the what the party situation is. I'm just thinking like the what was it, Macron, Le Pen in France. Those French elections were pretty pivotal back in 2017. They weren't as crazy this year because I think everything was being overshadowed by current dollar strength and risk off trading. But anyway, all right. Yes, I get it. Fed speakers, not exactly the most exciting, but I'm telling you, the market is listening. I'm telling you, if you see what the markets are correlated to, it's not what earnings are showing, right? It's not what companies are showing. The markets are correlated to what the Fed and central banks are doing. So you can snooze all you want, but I'm telling you, the stuff these, people say, it matters. And unfortunately, the market kind of clings to it like it's gospel and makes some pretty intense decisions off of it. So if these combine for a surprise narrative, then the market might react. Otherwise, if it's fallen in line with what's already laid out and expected, then it is what it is. So it may be a boring week, right? But it's still the middle of May. We're still looking for trends. I'm, of course, interested to see what we have here on the SPY after we defended the 20% level last week. We have some gaps to consider. I'm looking, take a look at this. I'm just trying to be realistic here, try to be objective. I would love to see the market rally like everybody else, everybody that's holding stocks. I would also wonder, with this long wick from last week, does it stay that way, or is this going to be a week that it comes back down to retest and defend the same floor? Also, look over here. If you can see the number, it's very small, but the 382, that is a giant swing Fibonacci level from COVID. So COVID's low to the high we had in 2021 and early 2022, that 380.57 on the SPY is a 38% retracement level. Okay. So now keep in mind, don't confuse that Fibonacci level with the correction from high to low, right? A 382 pullback, if we go from high to low, value-wise, we're talking about a 20.62% correction, right? So it's a 20+% correction off the highs, but it's a Fibonacci retracement off of the COVID lows, right? So two very different things, but to me, those are very important levels I'll be watching on the SPY, right? And we'll see how stocks react because of that. Listen to a good podcast this weekend. Jordy Visser, Weiss Capital Management, In Search of Green Marbles. He got off the Derby stuff. He was on like 3 podcasts in a row for Derbies and this Derby paper, which was exciting if you had, bet on Rich Strike and hit 80 to 1 odds. Awesome race, by the way. But anyway, Jordy Visser with Weiss Capital was talking about some other stuff as far as recessions, where we're at, volatility, credit markets, and just paints a pretty interesting picture on where he sees the markets going. So, all right, let's move on. Any requests? Any currencies? Any cryptos? Any stocks? Like I said, I'll show you the notes that I have this week. It's going to be pretty intense. We made our way through quite a few of these last week, but we're going to do it again because this is where the official news happens. 520 expirations, a lot of covered calls, some credit spreads. I will probably have a mix of things this week. Maybe I take some losses, small losses, hopefully. Maybe we have a decent week in the stock market and we have credit spreads we win on. But we'll make an assessment. This will be just a super busy management week for us in EOD. LTC, Litecoin. Sure, Linda. Litecoin trading at 67.22. Let's go to the daily time frame here. So I'll say this. I am pretty happy that in crypto, all I'm focusing on right now is Ethereum and Bitcoin. That is it. Again, no offense to the other coins out there. I just don't think that I want to be parking money in potential uncertainty with more pain to the downside. I say that because if you go to this ticker here on TradingView total, this is total market cap. And over the last, let's go to the weekly chart. I think the last 7 weeks, the percentage of market cap that has been literally wiped out from cryptos has been insane. So we were at 2.18 trillion, down as far as 51%. We're sitting now currently at 1.27. Yeah, 1.274. So 2.18 to 1.274. 51% market cap wiped out. And the same is true for the stock market. I mean, we saw tons and tons of market cap wiped out. I mean, crypto especially. I don't know if I shared a screenshot of this Friday. Right here. This is crazy. Coinbase CEO and CEO of Binance. 84% of, again, attached wealth with their stock options, right? So if I'm the CEO of Coinbase and I have my money in my part of my plan, right? My stock option plan is tied to the stock price of Coinbase. It's down 91%. This guy's worth is down 84%. So he went from a, roughly $10 billion net worth to 2.2. Sucks, right? Sucks to be a billionaire. Just kidding. And then this one here. CEO of Binance, bank account dwindled from 96 billion to less than 12 billion. That's a big wipeout. Nobody feels bad for billionaires. Okay. I'm not saying feel bad for them, but wow, it's crazy. So I thought that was interesting. And of course, the other wealthy fellas, Elon Musk, Jeff Bezos, Mark Zuckerberg, they lost some money too. That's the route that we're seeing. Right? Okay. So Linda, I was going to say on Litecoin is everything is pretty questionable right now. What I see technically is this. And I see the request coming in here, dollar CAD, Euro New Zealand. Yep, we'll take a look at those dollar yen, sure. So Litecoin 67. I just made this trend line bold. I would say if there's more of a sign of a bullish pattern, let me see this bar count right here for a second. So I've got a bar count of 165. It's not quite into extremes or anything like that. We have oversold conditions, looking for some divergence. I would be interested in maybe a technical pop. So let's say that we, can hold this level, maybe work our way back up towards this May pivot, take out one of these highs, break this trend line, and maybe have a reversal. I think what I'd be looking for is the sign that the coast is clear. Way more confirmation is going to be needed. Having this kind of capitulation move, could it get worse, 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 worse? Yeah, it could be way worse. Okay. But when it bottoms, I mean, maybe this is bargain shopping if you're patient, right? And then maybe the coast is clear if we pop up here towards $100 and we have lots of potential recovery. That's an awesome pivot cluster from 220 up that we were talking about a lot this year. There's just no sign of a bullish pattern yet. So if I look at Litecoin, I'm looking for a bullish pattern or a capitulation move that we could just draw an aggressive trend line and let this thing bottom out at a super cheap price. If you're interested, I know you have a sizable holding in Litecoin. I do too. But again, I'm not adding much to Litecoin. I'd rather play Ethereum, Bitcoin for right now, just to see if that's a safe. I'm putting quotes on that safe crypto. I just think it's more of the staple crypto that I'm looking to play. Okay, good stuff. All right, Euro New Zealand, let's take a look. Euro New Zealand, I'm still looking for bullishness, and we are still getting it. We don't really have a ton of pullbacks, but they are what I'm looking for. So any type of pullback, rally, right? Looking to buy. How high do I want to go on Euro New Zealand? Well, we've already taken a trade here, right? We had a really nice kind of equal low falling wedge, broke this thing out, took it back into these pocket levels, past support, become resistance. So I'm kind of exhausted on the buy side unless we can find trendline break, confirmation to buy. If you're using, stop losses on U-turns, meaning you get an entry, stop loss below, and price goes up, great. Eliminate risk, protect your profits. How much higher can this go? Well, I think that if we have smaller time frames, we get a trendline break, stop loss below this U-turn, we head up higher, we come back up into this monthly pivot, weekly pivot cluster, we might even come after these highs again around 1.72. And what goes down for this big trend in March, bottoms here in April, rallies here in May, and it turns out to be exactly where we started. So it's kind of a zero-sum game, and it's just a rebalancing. But I still think right now Euro New Zealand looks better long. And it might just be a big range, right? This could be resistance that we end up trading off of, like we get to this level, we look for a sell high. If we have any dips, we can still look to buy. We come back to these lows, still interested in buying. So the big areas, sell high, buy low, and if you're in the middle, go to the path of least resistance. It is still somewhat bullish. Okay. All right, that's Euro New Zealand. Good stuff. Dollar CAD. Dollar CAD 29.24. I haven't pulled the trigger on anything dollar CAD. I know that I've been talking about selling it at 1.30, 1.3050. It's a tough trade. I mean, it looks like we could still have the possible fall on the dollar CAD before we rally. Okay, just the structure is pretty complicated because this channel is no longer really valid. I mean, I see this as the play. It was kind of faking me out, thinking like, all right, I guess we're going to go bullish on this. I'm just not convinced that it's the bulls. I think we might pull back one more time to, let's say, 26 or 25. I just don't feel comfortable shorting the dollar CAD. If you short it, I hope you're scalping it. Scalp it at 1.30, 1.3050. There's clearly reactions off those round numbers, but I'm not holding a short position. Make sense? I don't want to hold a short position. So I think right now I'm just going to wait. If we have any reasonable pullbacks or look for flag patterns, something like this, where we have high, low, pullback, and then flushes lower, we can look for that. Look for a sell trade, stop loss above the swing high. Otherwise, I'll just let it come to me. If it comes to me down here at 24, pretty interested in defending it, taking it back up. Trade the structure. Okay. All right, that's dollar CAD. Dollar yen, Joe, sure. Dollar yen trading at 129.08. We are starting to break, starting to confirm the right side of this trend line. I'm still very small in the trade size. I'm still conservative on this, not trying to call the top at 131.42. I would love to see this one roll over to the downside. If we have stocks drifting lower, if we have stocks revisiting the low from last week on Wednesday, we'll probably see yen strength kick in again. Okay, so if we see some yen strength, expect some more risk off trading. Dollar yen could be one of those where the dollar maybe tops out a little bit, okay, but the yen might take over and be the favorable kind of safe haven pair. If that is the case, there's still plenty of room to the downside. Pivots galore. I'm trying to take this thing back to around 122, maybe 121.20. There's a pivot cluster that I really like. Also, I mentioned this a handful of times in the Pockets Pattern Pro classes, the 50% pullback zone on this low to high. If we pull back to 123 and change, that is equilibrium on this move. If we pull back any lower than that, great. Pivot clusters and previous support levels. But we have to respect the 382, the 50, the 618, because from a Fibonacci level, that might be a high, low, lower, high, lower, low. Market can react off that and buy it again. So that being said, we come back to equilibrium. I want to make sure that I'm in some profit on that dollar yen. Okay, so continue to be patient. We'll assess this one this week in Flex. Okay, dollar yen, we're good. Yes, euro pound, Mazen, sure. Euro pound 85.09. So I had a breakout trade around 85, like 85.60, I think, and try to take it up towards 86.20. We did take it up there. I'm in the trade. I still have that pivot set. It hasn't hit the yearly pivot. I'm looking to see if it will return. Otherwise, I have a small trade in here, and I put that second order down here. We did shift it. It was a second order that was going to be a breakout trade and a pullback. I moved that down to the lows. So I do have a small order in here trying to get back to this yearly pivot or higher. My next trade is down here at the lows, and I'll just continue to work through a channel trade. Trade 1, trade 2, even if it comes back halfway or stays in the channel, we can find a way to take some profit inside that structure. Pound Swiss is doing the same thing. There's a lot of sideways movement, and we're trying to determine if it's going to give us a breakout or not. Okay, that's euro pound. Herb's asking for euro dollar. Euro dollar's off the lows, 104.25. Again with the euro dollar, again with the dollar index, wait for a trend line break. Okay, wait for a trend line break. There is discussion of the euro dollar going to parity, path of least resistance. When I say parity, that's PARITY 1.00. If we're going to fall another 425 pips, I don't want to be sitting here stuck saying buy the euro dollar. Look, I'd happily buy the euro dollar at 1.00, but I don't want to buy it aggressively now, thinking it's going to stop going down. If it's going to stop going down, we have to break a trend line. We have to take out a recent high. We've got to start looking like, I see oversold conditions, but it's May. It's the middle of the month. Maybe we push lower. We come back and tap this weekly pivot. There's still a pocket. It could flush down. There could still be dollar strength. All right. The market could be working its tail off to price in all these rate hikes that the Fed's going to come out with. We already know that they raised in March. We know they raised in May. They're talking about raising again in June. And there's 7 hikes, I believe, this year that they're talking about. It just depends on, are they doing 50 basis points each? Are they doing 50 to 75? They cut off the 75 with the narrative. So anyway, the market follows the Fed. And this tightening, this risk-off trading, recession, inflation, all that stuff is like, what's the Fed going to do about it? Is the Fed going to offer a lifeline? Are they going to offer a safety net? Are they going to offer a backstop like they always have? Or is the Fed like, well, we're going to tank the economy and force the recession, even though it's not our fault, right? There's going to be all sorts of blames. They'll play the blame game and transfer it elsewhere, but really the Fed's created this pretty awful situation, and it's been this way for a long time. So what are you going to do about it? Complain? No, you got to trade it. So anyway, back to the euro dollar. I like oversold conditions. I am long on the euro dollar at this level. I know that I need to do a much better job of getting my break even lower. All right. 5th wave move, we're looking for a 1, 2, 3 correction. Now, I don't know if that correction is coming now or if that correction is coming with this thing tapping 1.00. I'm prepared to take this down to the lows. We talked about it last week in Flex. If we get to parity 1.00, I'm going to buy some there. I'm going to buy some at 98. And, all right, I could lose a stock this week. Good. And I could, 1.00 to 98 to 96, like I'll level in at these areas. I'll build a low position, lower my cost basis, and I'll sit on the euro dollar a little bit longer. Okay. But more importantly is look for a trend line to break. SLB closing at 4. Oh, good. I want to lose SLB this week, WEAT this week. That'd be great. Those could be 2 winning stocks to make some nice profit. Speaking of, I think, let me confirm this here. Accounts, transactions. Let me check this one really quickly while it's on my brain. SLB. This one got called away last week for profit. I had a 39.50 call, should have been called away, and transactions with wrong account. Transactions. So that was my profit last week on SLB. Stock got called away. 869, pretty happy with that. We flipped it over. It was like a 2 to 3 week hold, so not too shabby. And same thing. If I lose it this week, I have another position on SLB for I think 1,000 shares, and it's the same situation. If I flip it for 41, that's gonna be about $9 a share at 1,000 shares. I'm pretty happy with that. SLB WEAT is another one that is a wheat. Clever name, right? So I have a covered call at 12, and that goes out I think until June something. So anyway, we got on the euro dollar. Wait for that trend line to break. Linda's asking euro Swiss. We spent some time on that earlier. I'm just going to repeat it. Obviously looking for some new highs. You know, we had some pullbacks into past resistance. If this is a cup and handle, 10400 holds, 103.75 holds. Come on, euro Swiss. Don't disappoint me. Give me the run. 106.20, 106.50. That's my profit window. I have projected moves all the way to 108. I'm not going to lie. I think that we could stay on this train for a while towards 109 plus. It's been a long time coming. It's been a super annoying position in adventure, but it's also going to be a handsome payout. It just requires a ton of patience. So I want to see it break the highs at 105. I think once we break 105 and hold, next stop is going after this 106.10, trying to find that yearly pivot at 106.20. We're talking profit protection and hopefully a lot of it. Okay. Euro Swiss, we're good. Yes, yes, yes. All right. How much capital would be the least for the new linked account system? You're talking about Shadow Trader. I don't know. There's probably information on that. That's not me to say. I think it's probably better to have, you know, minimum of like 10K or something. Just I know how it's traded. I know it's aggressive on support resistance levels. I know it's a bunch of robot trading. It levels in, so you're gonna have to have some margin and capital, trade size. Also, if you're non-US trader, that's great. If you're a US trader, you have to approve every trade. So talk about it first and get the details on that. That's my 2 cents. Okay. All right. Any other quests? Any final thoughts? We're just getting started for the week. Weekly outlook. Let's see what we have. Again, watching the levels to see where the SPY is going to be. Amateurs open, pros close. We got a couple of gaps watching that 20% level. Remember, keep it simple. 20% is from the highs, but we have a 38% Fibonacci that's not that far away, and it's right here at 380. So could we fall into that level? Again, kind of justify some buy trades. What I want to bring one more note to is on this right here. Check this out. Okay. Many analysts don't think we've hit a bottom yet. Fewer than 30% of the S&P companies have hit one-year lows during this downturn. So this could be like the silver lining as well. That's because we're not in a recession, and it doesn't have to be that bad because not that many companies are doing so poorly compared to what we had in 2018 when the Fed raised rates for the 4th time. The market tanked like 20% over the month of December to January 28. It was December 2018 to January 2019. It's like a 20% drop. Okay. Now it says 82% of the S&P 500 companies were down to fresh lows in the 2008 crisis. So, I mean, it's clearly NASDAQ is, I'd be curious, like this shows S&P, but I'm curious what it shows for NASDAQ because I feel like the NASDAQ percentages are way higher. X percent of the NASDAQ is down to fresh lows for the year. I'm sure it's like over 50%. So I've seen a majority, like 70+% of the NASDAQ stocks were down like 30+%, which I'm assuming are very close to making some fresh lows for the year. But S&P apparently is somewhat resilient, and only 30% of S&P is hitting fresh lows. So even though we've seen a downturn, even though we've seen some super high volatility, there's still a couple levels that we may be testing. So watch this week. This is what we'll talk about a lot in Equities on Demand. I'll be watching for risk on, risk off flows in Forex for the Flex Trading Room. And that is that. Okay, thanks, Don. Appreciate that. Gerard's asking for pound US dollar. That'll be the last one. Then I'll wrap it up. Okay, 122.41. I have a small position in at 22.25. We're in. I'm looking to take this back to this monthly target at 27, 2800. We also have some really nice pockets. Traders know this in the flex room. We've been looking to build 1.20, 1.1715. I'm looking at 25 to 30-year lows to build a pound dollar bounce. Right now, again, you got to have some courage to be like, well, it's falling. Why don't we just sell it? Well, I mean, it's already fallen from 1.32 to 1.22. We're already 1,000 pips behind the move if you're not selling. So I'm not that interested in selling. Now, if it's a pullback, sure. If we pull back, then we can sell more. But if we've already gone low enough and we keep going lower and we're showing oversold conditions, why would I buy it? Or I'm sorry, why would I sell it more? So we are oversold. I'm looking for divergence. I'm looking for these big price levels with historical significance the last 5 years. Maybe they matter. 1.20 is a round number. We had a COVID crash low at 1.15. I'm still very interested in buying that area. And where do I expect to take it back to? 127 to 128. So if I buy it at 120, take it up to 128, to me, that's a good trade. I might have to sit on it for a little bit. I might have to find this thing bottoming out, but I'm interested in starting to build a buy position here. I'm willing to take it down to these COVID lows at 115. Again, draw a trend line, wait for confirmation, start looking for some price action to support your bullishness. Okay. All right. Testing 3K, all micro lots, conservative setting, margins fine, testing. Okay, that's good. That's good. Yeah, fine. So like I said, you find out the details. If you're buying it, then know the details. So I'm not trading it. It's not my system. But I know what's going into it. I know it's a good structure and it's had great results. But that approval is going to be the key thing. You have to make sure you're proving all those trades because it is a very active system. Okay. All right, cool. All right, buddy, I'm going to let you go. 23 minutes before we have EOD. It's going to be a busy session. We're going to start knocking out a bunch of stocks. We might be closing up credit spreads early. We might be managing them till the 11th hour on Friday. But we will start at the top, A to Z. Flex Trader, see you Tuesday, Wednesday, Thursday. And let's have a good week, everybody. Let's have the best possible week that we can. With all things that happen, let's let it unfold. Right? Cool. All right, sounds good. Thanks, everybody. Have a good day. See you.